Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, Alphabet blows past expectations in its latest quarter, but AI spending might be weighing on profits. Citi analyst Ron Josey explains.
I think you should be investing in growth, and I think you should be investing to gain as much possible share as you can.
The potential confirmation of Kevin Warsh as Federal Reserve Chair is in focus on Wall Street and in Washington. Banking Committee Senator Bernie Moreno joins us.
I hope that we can put all this political nonsense aside and let's get Kevin Warsh confirmed, because most importantly, it is a huge upgrade from what we have right now running the Fed.
And it is Super Bowl weekend. Americans are expected to move well over $1.5 billion for bets, wagers, and trades relating to the big game. Author Jonathan Cohen says sportsbooks and prediction markets can be a slippery slope for society, especially for young men.
What I think we should do is make it all but impossible for someone who's gambling like me, $10, $12 here and there, for that to be the start of a dangerous journey, for that to be a gateway drug into a more serious gambling problem.
Those stories, plus Amazon's shadow of honor, and more fallout from the Epstein files. It's Thursday, February 5th, 2026, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And this morning, we are looking at a mixed picture for the U.S. equities. Dow futures are off by about 86 points, but the Dow was actually higher yesterday. It is less than 0.5% from its all-time high. If you're watching what's happening with the S&P 500, it's flat right now. Yesterday, the Dow was down for 5 out of 6 sessions, but it was the NASDAQ that really bore the brunt of things yesterday. It was down significantly. In fact, the NASDAQ 100 is now almost 5% from an all-time high. NASDAQ is indicated a little higher this morning. You can see here, though, off by about 1.5% yesterday. For the week today, down by 2.4%, and we haven't seen volatility like this since President Trump was unveiling his tariff plans last April.
Yeah, 2 straight declines of 1% back to back. It's been since April.
Yeah.
Then I looked at a 1 year, like that looks like, ugh. And then I looked at a 1 year chart of the NASDAQ, and it's
been unbelievable. Yeah.
Like that. And then at the very end, you just see this
tiny drop.
Yep.
There are already people who are talking about, is this the time for value stocks versus growth stocks again? If you look at value stocks versus growth stocks all the way back to 2008, it's a set of lines that have not crossed since that point. But there are people who are looking at this and saying, well, maybe this is a time. Don't want to get premature kind of speculation about some of these things, but it has been a few days, and some concerns here about technology and about software companies in particular.
It's like anything that just went stratospheric,
right?
Which includes, you're going to get to Bitcoin in a second. I mean, AI, tech, and crypto.
Yeah.
People go on other places I don't know. Does everyone decide at once? I don't know. They all using the same AI program to
tell them what to trade?
Yeah.
Meantime, shares of Google parent Alphabet trading lower. The company beating profit and revenue expectations, but investors are focusing on spending plans. The tech giant says capital expenditures will range from $175 billion to $185 billion. That's just this year. Top end of that forecast would be more than double what was its 2025 capex, which people thought was remarkable unto itself. Joining us right now to break all this down is Ron Josey, Citi senior internet analyst. Alphabet is one of his top picks across the internet sector, and we'll start with whether it still is, Ron.
It remains one of our top picks, and you're right. I think the big surprise out of the quarter, not last night, it wasn't the 17% acceleration growth in search. It wasn't the 48% growth in cloud, and it wasn't the demand, or at least called the backlog of cloud computing, but the guidance on CapEx, which, Andrew, you said it right, sort of unfathomable a few years ago, and here we are, $180 billion at the midpoint. But it remains our top pick, to your question, specifically because of the results that they're seeing as a direct relation or result from their investments in AI, and seeing how Gemini and also TPUs and the agent side of the platform are all delivering better overall results, I think you should be investing in growth, and I think you should be investing to gain as much possible share as you can.
I don't know if it's an inflection point in terms of just the psychology of the market. I don't know if there's a realization that the CapEx spending all of a sudden turns these technology companies, which were, by the way, capital light businesses.
Right, which is why they did so well for so long.
Mm-hmm. And all of a sudden they may turn into, I don't want to say utilities, but industrials in their own way, given the amount of spending that's going to be involved, given the data centers, given if the data centers are in space even, the amount of money you're going to spend to have all of that happen. So that is, I think, the question that's sort of,
does the growth potential
circling right now?
Does the
this
growth
better be
potential,
good.
Right?
AI better be good.
Justify the
Gosh darn it, if it is really good, no one will ever have a job again. That's just really.
But that's the other piece of it. If it's
So
that
weird.
darn,
win-win.
Right.
This is what I've always said. Even in success, you could have failure, because if it's so good,
Tell me about it.
and then no one has the job, no one has any money to pay for it.
I know. And the machines won't need us, so that's secondary.
I'm not even. I'm not
that's
even
down the
that's
road a
a
little.
second
That's
derivative
road a
issue.
little.
Where we're trying to go with this is we were talking about how this quarter appears not just about Google, but everybody. The first real inflection point where, for some reason, the psychology of the investment community is no longer necessarily rewarding spending. And people aren't saying, "Oh my goodness, there's this great opportunity ahead." They say, "Oh my goodness, maybe these capital light businesses are going to be like utilities."
It's amazing how quickly things have turned. Google was the AI loser, so to speak, in 22, 23, 24. Here we are, 25. They have a real product, and now in 26, that product's going to start changing how we act and move online. And so how we use internet, how we use websites, how we use apps are going to change completely. And Google is in the pilot seat right now.
All right. Thanks so much. It's nice to see you.
Thanks, Andrew. Likewise.
OpenAI's models could help power Amazon's Alexa assistant and other internal projects at the company. A source tells CNBC that the collaboration between the two companies is being discussed in tandem with Amazon's ongoing talks to invest up to $50 billion in OpenAI. Separately on Amazon, the company announcing that CEO Andy Jassy will tap its vice president of worldwide selling partner services as a new technical advisor next month. That role is often referred to inside Amazon as the CEO's shadow advisor. Employees in that role typically go on to assume greater responsibilities at the company. In the early 2000s, in fact, Andy Jassy served as Jeff Bezos' shadow. Amazon is set to report fourth quarter earnings after the bell tonight.
You'd have to have a pretty good hope that you'd get to the top spot to agree to be called someone's shadow for a while, I would think.
It's kind of cool. Everybody wants to be a shadow.
No, you don't. It sounds like a total
shadow.
You
lackey.
want to be the shadow Fed chairman?
No, I don't want to be the shadow of
Peter Pan?
Yeah, Peter Pan. I have a problem with that. It's a pretty good description. Coming up, I don't ever want to
None of us
grow
ever
up.
grow up.
I don't want to ever grow up. I can't.
I don't want to grow up. I'm
Age doesn't do it. I was hoping it'd be like this. You could
Instant
cross
maturity?
a Rubicon somewhere, but it never doesn't come with age.
President Trump offering some details on his decision to choose former Fed Governor Kevin Warsh to replace Jay Powell as Federal Reserve Chair. Here's the president in an interview with NBC News.
Does your new Fed pick understand that you want him to lower interest rates?
Oh, I think he does, but I think he wants to anyway. I mean, if he came in and said, I want to raise it,
if he said that, he wouldn't have gotten the job.
He would not have gotten the job, no.
The president said he thinks the Fed is an independent body, in his words, in theory. But he suggested that the central bank should take his advice because he knows the economy better than most people, he said. He said he didn't have much doubt that interest rates would soon be lowered.
Meantime, Fed Governor Lisa Cook signaling that she won't back another interest rate cut until she sees progress on price pressures. Cook telling the Economic Club of Miami that she's more worried about inflation than a weakening labor market. She said, quote, "We put a lot of easing into the pipeline at the end of last year, and I think that given where the labor market is, where inflation is, this is the right time to sit back and wait to see what happens." Cook voted with the majority in last week's 10-2 Fed decision to keep interest rates steady, and so one of Kevin Warsh's first moves will have to be to persuade her otherwise.
It's a hard job. The dual mandate is almost impossible, to constantly.
That's why Alan Greenspan always said that he focused on inflation.
But if it's 45-55 balance one way or the other where the risks are, and you're actually making policy based. You don't have the resolution to do it effectively. It's like a crapshoot or a seat of the pants.
But Greenspan, as you know, his theory was if you took care of inflation, the rest would take care of it.
A lot. I think Warsh is more like that.
Probably. Yeah, I think so too.
Yeah.
The chairman of a major corporate law firm, Paul Weiss, resigning his post amid fallout over emails between him and notorious sex offender Jeffrey Epstein. The emails were among millions of Epstein-related documents released last week by the Justice Department. Now, earlier this week, Paul Weiss said its chairman, Brad Karp, had attended 2 group dinners in New York and had what it called a small number of social interactions by email with Epstein, which the firm said Karp regretted. Now, in a statement, Karp said, "Recent reporting has created a distraction and has placed a focus on me that is not in the best interest of the firm." He will, though, continue to work at Paul Weiss, though not in that chairman role. And here's the interesting part. This is like the takeover is now fully complete here. Scott Barchet, who had been the chair of the firm's corporate department, was appointed chairman. And the reason this is interesting is Scott Barchet had worked at Cravath for a very long time, was brought over on a lateral move, effectively. I don't know what we call it. In the legal world, they call it lateral. He's probably the biggest rainmaker at the firm, but he was the lawyer at the firm who really pushed for the settlement with the Trump administration at the very beginning of the administration's term. And Brad Karp ultimately went along with it. And they were the first law firm to agree to this, which then led to all the other law firms to agree with it. There were there was a number.
Brad Karp's a big Democrat.
There were a number of lawyers who left Paul Weiss because of that decision. And so the whole thing is it's fascinating just to see sort of the drama playing out inside this firm, Paul Weiss. We don't talk about Paul Weiss so much because they're a private law firm that you can't buy or sell the stock, but they have a huge influence in terms of just the way corporate America even approaches the world in so many ways.
So that didn't hold him back from getting to where he is now, I guess, settling with Trump. When push comes to shove, this is probably a bigger deal. Epstein.
For Brad Karp, this is a bigger deal, yes.
Right. I like the way it was phrased, though. What was it? It was a small number of social interactions by email. It's just crazy that in this day and age that there's millions of pages about anybody, and B, that you just put in a name.
It's all his emails.
That's what I mean.
Email never goes away.
You guys showed me how to, I'm clueless over the weekend. I didn't check to see who was in
Everybody
there.
else was like searching on the search engine.
Exactly.
Look for my name, look for my spouse's names, look for everybody, all my friends, and then look for everybody I don't like.
I mean, I think I'd know if I met the sleazebag, but
it's weird. Like,
but no one knew who.
In that picture where you just happened to be standing.
I told you I was
place.
at the Victoria's Secrets thing, and he was standing on. It was 1995, and in the documentary on him, you can see me in the background. No one knew who he was but no one knew who he was in 1995. I was the last.
But interestingly,
I didn't know who he was in 2000.
Victoria's Secret was Les Wexner, and Les Wexner was Epstein's initial. I don't know if you want to call him a mark.
Thank God we all dodged that bullet, because any of us could, for the grace of God, could have been some, in our business in some way.
Yeah, no, I happily never knew him.
Which I can't believe, because you are Mr.
I never knew the man.
But you were a little bit young when he was really in his prime. I was like that could have been, I could have met him at that Victoria's Secret thing. And hey, man, thank God.
Cheese will be next.
Still to come on Squawk Pod, Republican Banking Committee Senator Bernie Moreno. He's eager for a change at the Fed, and he'll be pushing to confirm President Trump's pick for chair.
Look, at the end of the day, Kevin Warsh is highly qualified, highly respected. Everybody wants him in there. I hope that we can put all this political nonsense aside.
We'll be right back. Welcome back to Squawk Pod, where we're talking Fed, GOP politics, and more. Here's Joe Kernan.
Ohio Republican Senator Bernie Moreno, he serves on the banking committee, and we can cut to the chase, Senator. It's good to see you. I'm from Cincinnati. I'm I was happy for you. I'll tell you, not a big fan of who your opponent was. I'm honest about a lot of things. I've gotten to an age where a lot of times, Senator, I just, you take it for what it's worth. But congrats on the election. Have you been on the show yet? Is this your first time?
You haven't invited me, Joe, though we have that Ohio connection.
I can't believe that. I can't believe that. Thanks for being here. But what I'm going to get to now is a little bit sticky. So it just looks like the president was mad about too late Powell, as he calls him, not lowering rates. And then we get to this investigation. Do you think a lot of times where there's smoke, there's fire? In this case, do you honestly believe that there was some criminality that need to be looked into in terms of Chair Powell's testimony?
Well, from my perspective, that's up to the Department of Justice. What I will tell you is he's absolutely guilty of being terrible at his job. He's absolutely guilty of being an egomaniac, and he's absolutely guilty of driving record inflation that crushed working Americans for 4 years. So that's unequivocal. This guy has run the Fed losing hundreds of billions of dollars a year. He's made the Fed very political, which shouldn't be the case. So he's just guilty of being inept. In terms of he's criminally guilty, that's not up to me.
Right, but Senator, we hear the president every day talk about how great the country is doing right now in terms of GDP and inflation is down. And so are all these good things that are happening in spite of the Fed, or so you don't give the Fed any credit for orchestrating any of the economic success we've had the last couple of years?
Well, you said the last couple of years, so absolutely not. I mean, again, they drove inflation up. They were way too late on reacting to the fiscal stimulus that was out of control when the Democrats were there. President Trump is the one that secured our border, has deported over 2 million people that came into this country illegally. He's driven GDP to record growth. In fact, on the campaign trail, if President Trump ever said we'd have 4 or 5% GDP growth, your show would mock him. But that's the reality. Record numbers. We did an incredible working families tax cut bill, which prevented a $4 trillion tax increase. You know, my Democrat colleagues like to say that tariffs are taxes. You know what's taxes? Taxes. And we prevented that tax increase. We gave relief to working Americans. They're going to start seeing it now in their paychecks, and 2026 will be a phenomenal year.
It's a good piece in actually the Journal today looking at tariffs. There are people can argue both sides of the whole tariff issue, Senator, about whether it's a tax or not. But the people that hate the tariffs the most are the people that want higher taxes anyway. So I don't even really understand.
Exactly.
I don't
That's
understand.
my point.
It's like you'd love to raise taxes. Now you're finally calling it a tax, but you don't like that either. Do you think Tillis will be able to stop Kevin Warsh from being confirmed in a normal time frame, or do you think there's some way around it that it gets out of committee and you get to a full vote?
Well, I don't think any one senator should impede an investigation one way or the other. I think if there's a concern, then the concern should be followed through. Chairman Scott, who's a good friend, a great chairman of the banking committee, the guy I got rid of was a terrible chairman of the banking committee, has said he doesn't think there was intent. That's certainly a factor in there. Look, at the end of the day, Kevin Warsh is highly qualified, highly respected. Everybody wants him in there. I hope that we can put all this political nonsense aside and let's get Kevin Warsh confirmed, because most importantly, it is a huge upgrade from what we have right now running the Fed. That's for sure.
Senators, are you recommending that the case continue, or are you recommending that the case end? That's what I'm trying to understand. Given that there are questions, I think there's fair questions to be asked just about why the case was brought to begin with.
Well, my position, Aaron, is pretty straightforward. As a United States Senator, I should not weigh in criminal investigations one way or the other. What I will say, like I said, clear to me, he's guilty of being incompetent. In terms of whether that was a crime, that's not up to the Senate to decide one way or the other.
Can I
and
ask
by
you
the
a
way,
question?
that has nothing to do with whether Kevin Warsh is qualified and should be immediately confirmed.
That's nothing. I agree with that. Do you believe that the President of the United States should weigh in on criminal investigations? This goes to the question about the independence of the Department of Justice, actually.
Well, look, the president has opinions. Every president has opinions. Politicians have multiple opinions, even at the same time, in many cases.
But you just said that you don't have.
That has nothing to do with that.
You just said that as a senator,
like I said,
you shouldn't have an opinion. I'm just asking the question. You just said on the air that 2 seconds ago you shouldn't have an opinion. Yeah. And then I said to you, and then I said to you, should the president? And you said, well, the president has opinions. So do you have an opinion on what's going on here? And if you said it's inappropriate for you to have an opinion, explain the difference between that and somebody else.
Am I able to answer your question now?
Yep.
So what you asked me was whether I thought something should happen, meaning that I should direct an outcome. Of course I have an opinion. Look, he was asked a question about the renovations at the Fed, which are completely ridiculous. Whether he intended to lie or did not intend to lie, the truth is he did give us false information. Intent is something that happens in a criminal investigation. You know that better than I did. I'm a business guy. You should know that as a lawyer. That's not the question. We have opinions. The question isn't whether I have an opinion or not, is whether I should direct the Department of Justice to go one way or another in a criminal investigation. That's what's at heart. Look, at the end of the day, Jerome Powell is the worst Fed chairman of my lifetime. Kevin Warsh will do an amazing job. Let's get the guy confirmed. That's the bottom line.
I think of Andrew as a lawyer, too, sometimes. His dad was a very good lawyer, a famous lawyer, I think, that Sorkin. But and a lot of times he sounds like a lawyer, I think, sometimes, Senator. You know what I mean? And not necessarily in a really good way. No, sometimes in a good way.
I just play one on TV, Senator. I just play one on TV.
He just plays one on.
I see the difference now.
And I knew I liked you as a senator. You're not a lawyer. You said so that's good. What did Shakespeare say? No, we don't want to say that. Shakespeare, that was horrible. Senator, thank you for your time this morning. We appreciate it. And
thank you.
Where'd you grow up?
I grew up. I was born in South America. Grew up in South Florida. Been to Ohio for 21 years. Love it. Great state. In fact, if anybody's watching, place to go. Leave New York. Leave California. Come to Ohio.
The balmy Ohio. Yeah, it's a lot warmer than Florida, I think, in Ohio. Anyway, Senator, thanks. We'll see you later.
A shameless plug here. Senator Thom Tillis, the North Carolina Republican who's no longer running for re-election, has been very outspoken in his break with fellow Republicans like Senator Moreno that you just heard, particularly on the Department of Justice's case against Jay Powell. Tillis was actually on Squawk yesterday, and you can scroll to Wednesday's Squawk Pod to catch that interview. Coming up next, ahead of the Super Bowl, prediction markets are playing a growing role in betting on the big game. Our Contessa Brewer reports from San Francisco.
People are using the prediction markets for sports in place of FanDuel and DraftKings sportsbooks.
Critics, though, warn that the ease of access could have significant consequences for the financial and mental health of young Americans. Author and expert Jonathan Cohen joins us after the break.
Within a few months of the arrival of sports betting, or within a few years, you see an increase in bankruptcies, an increase in auto loan delinquencies, and reduced savings and investment in low-income households.
This is Squawk Pod.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. We got a lot of big stories.
We're just a couple of days away from Super Bowl kickoff at Levi's Stadium in Santa Clara, California, a state where sports gambling is illegal, but the prediction markets, so that's what you're talking about, are filling the void. Contessa Brewer joins us with more from NFL's Media Row in San Francisco. Hey, Contessa.
Hi there, Joe. Yeah, look, FanDuel and DraftKings, official partners of the NFL, are front and center here at Radio Row, even though gamblers can't place wagers on their sportsbook apps. But their prediction platforms are up and running. The sports betting giants entered this prediction fray in the fourth quarter of last year, unwilling just to, sit on the sidelines as Kalshi, Polymarket, Robinhood, and others entered the prediction markets. And Kalshi made a big splash with its advertising before last year's Super Bowl, of course. Look at the action the week before Super Bowl last year and this year. Volumes up almost 1,400% on Kalshi year on year, according to data from Piper Sandler analyst Patrick Moley. What's the impact on licensed sportsbooks? Well, shares of DraftKings and FanDuel parent Flutter have just plummeted 40 to 50% over the past 6 months. BetMGM CEO Adam Greenblatt said in his earnings update yesterday, quote, "We're not seeing a material adverse impact that could specifically be attributed to prediction markets. Market research estimates a low to middle single-digit % impact on online sports betting handle, though. And that trading volume, guys, is attributed to states where sports betting is not legal, like California. It's attributed to sharps or these, professional gamblers who have been limited by the sports books in how much they can gamble. And they think that customers 18 to 20 years old have migrated to the prediction platforms. Las Vegas casino owner Derek Stevens told me that some of his biggest California customers have told him, look, we're choosing Kalshi over getting in the car, hopping on the plane, heading to Nevada for sports betting. I just a reminder here that CNBC and Kalshi do have a business relationship. I did ask Kalshi to explain to me how much of their business is coming from states like California and Georgia and Texas, and they just said right now they're not giving away that data.
Yeah, they were not forthcoming with that information. That is interesting. I know that you probably prefer to be in Las Vegas. Do you feel that you're close? Do you feel the pull, Contessa?
You know, I think this is the first time I've covered Super Bowl where I have not been in a sports book. So the fact that, this is a state that doesn't have sports books, it's just not possible. I'm on Radio Row coming to you live from the Super Bowl for the first time. It is different. There's a different level of energy. But what I can tell you is that people are using the prediction markets for sports in place of FanDuel and DraftKings sports books. And so let's see whether FanDuel and DraftKings can they make up on their prediction platforms what they lose by not being up and running in California as a sports gambling site. And by the way, that the whole issue of sports, it's not settled. There are 40 state attorney generals who have filed some kind of legal action, cease and desist letters, or sued. Tribes are suing. And so I think this probably heads to the Supreme Court to make a decision on what sports gambling is.
Right. What are the prospects for California legalizing it? And it just seems like if there's any state that could use the tax revenue, it would be that state. They do the opposite of what they should be doing on every issue. And the guy's going to be, the candidate in 2028. It's insane.
Well, look, a couple years ago, DraftKings and FanDuel and MGM, they all got together. They spent more money than on any ballot initiative in history to try to get sports gambling legalized in the states. And the biggest and most successful of the tribes argued against it. They did not want the commercial casinos coming in and peeling away some of the money that is spent on gambling in this state with the tribal casinos. My big question here is, made the rise of prediction markets coax the tribes back to the table? Maybe we might see this again.
I just thought of whenever I've driven to the desert and there's huge structures there. The Indian casinos are there, aren't they? I forgot. Yep, going down to Palm Springs. All right, thank you, Contessa. Have fun.
You're welcome.
The American Gaming Association expects U.S. bettors to legally wager more than $1.7 billion on the Super Bowl with sportsbooks, and that does not include the money that's flowing into prediction market sports contracts. Joining us now with what that all means and the impact on society is Jonathan Cohen. He is the author of Losing Big, America's Reckless Bet on Sports Betting. He also leads the Sports Betting Policy Hub at the American Institute for Boys and Men. And John, let's talk about this. You say that we're at a point that you would call a public health crisis where young men in particular are losing more money than they can afford. Lay out your argument.
Yeah, I mean, the report from Common Sense Media just earlier this week shows that about a third of 11 through 17-year-olds have gambled sometime in the last year, including on sports. And we're seeing these aggregate effects at the state level where within a few months of the arrival of sports betting, or within a few years, you see an increase in bankruptcies, an increase in auto loan delinquencies, and reduced savings and investment in low-income households. So to me, this is not about sort of individuals anymore, and we need to help, Timmy over there and Bobby over there, but this is sort of a rising to the level of public health where it could be addressed at a systemic level.
You think fantasy sports is the equivalent of a gateway drug here?
It is, right. It's not gambling, but it's not gambling. And it sort of teaches, especially young people, but really everyone, to sort of leverage sports for personal gain and to think about sports from a predictive standpoint rather than just sort of an enjoyment. So I think fantasy sports can be totally benign. And I don't mean to imply that if you actually do start doing fantasy sports, you're going to end up a gambling addict. But I do see how it was sort of a stepping stone culturally for us to get to sports gambling.
So the question is, what's to be done? And you are not advocating that sports gambling should be illegal. You're actually in favor of it remaining legalized. Are you in favor of it spreading to states that have not legalized it to this point?
I would say I'm okay with it spreading as long as it is done in a careful manner. And I would argue that over the last 8 years since the Supreme Court decision in 2018 that unleashed sports betting, that it has just not been done in a careful manner. That there are, of course, regulations on sports gambling companies, but I don't think that there are sufficient consumer protections in place, especially for young people, let's say people under the age of 25, that can prevent them from running into trouble. So I'm in favor of the existence of sports betting, even online sports betting. 60% of gamblers on the NFL account for just 1% of sports revenue, of gambling revenue. So I don't think we should do anything to sort of take it away from them. What I think we should do is make it all but impossible for someone who's gambling like me, $10, $12 here and there, for that to be the start of a dangerous journey, for that to be a gateway drug into a more serious gambling problem.
You've got a long list of potential solutions. I don't know how likely any of these things are. Voluntary self-control tools, loss limits and constraints based on affordability. I mean, some of this stuff sounds like a little bit of a nanny state. You can only bet so much based on how much money you put in or how much money you have.
The byword for all of it is friction, is the idea of friction. And that's what we don't have in the app right now. There's nothing in the app really that's going to slow someone down such that they're going to probably fall into this process of loss chasing, which is sort of a dangerous sign when it comes to gambling, which is, oh, you lose $10 on the Knicks. Oh, I'm so mad. All right, I'm going to go bet on the Sacramento Kings. Oh, I'm so mad, but the NBA is over for the night. I'm going to go bet on Dutch baseball. Oh, I'm so mad. I'm going to go bet on Czech table tennis or whatever the case may be, with bet sizes increasing and increasing. And that's the process, just slowing down the gambling, any person's gambling. I think that's sort of the byword for all of our policy recommendations, and anything that would instill that friction that is currently lacking, I think is a great idea.
Is that how it happens? I heard you talk about, you're a much bigger player than I am with your $10 to $12 bets, but how do people start? I guess that's how it happens.
Right.
Do they not realize, though, Jonathan, I'm telling you, I do $5, and first thing I did when I woke up, I looked, and Alabama didn't cover, and I had a parlay with Notre Dame. They cooperated. Providence won, and at first thing it was a $5 bet, but I could have won $40. That does it for me. $5 is fine. $5.50, $500, $5,000. If $5 works, why can't people do it that way and just have a little?
That's great. And sort of my conversation with Becky, I don't want to do anything to take away your $5 bets. I think that's great. I think you're behaving safely and rationally. And the problem is gambling really does work like a drug, where at some point you can start to
like a progressive
need more to get the same high that you used to get. And this doesn't apply for everybody, but that's the fear. And that's the fear, is that you're going to go from $5 to $50 just because you're going to get really close one night. You're going to miss your parlay, and then you're going to want to chase your losses. And then all of a sudden you're sort of on this dangerous journey that you didn't intend.
John, your point is that the incentive structures are set up improperly, that both the sports gambling books and the states have these incentives where the more you lose, the more money they make. I don't know how to change that structure. How would you potentially do anything to make it? I have no idea how you go about changing that incentive structure.
Yeah, and just before you accuse me even more of being a nanny state liberal, I'm okay with sort of industry-wide self-regulation. And there is some
Jonathan, by the way, I have to say, I agree with you on this stuff. I'm trying to come at this for how people because I have a son too. I see some of the problems with this. I don't know how you fix it though.
Yeah, I think starting with some industry-wide self-regulation is a great idea, and there are some even cases from Europe of companies sort of going the extra mile on their own. Flutter, which is FanDuel's parent company, imposes limits on bettors under the age of 25 in the UK.
Right, but Jonathan, here's the piece that I don't understand about the industry regulation, meaning the self-regulation piece. You'll have a company like Flutter do the regulation that you like, maybe, but then some other company, which may be ultimately bigger, doesn't. You'll have a prediction market company that is offshore.
And by the way, as a result of not doing that, they win more
and
customers.
they win more business. The self-regulation piece is always this sort of super complicated situation because it's so hard to actually, across the board make it work.
I totally agree. And I do think the self-regulation idea might have died a death with the rise of prediction markets, because we can get, the FanDuel's, Fanatics, BetMGM, Caesars on board. But then there's this whole other category now of operators, not to mention, illegal casinos based in Antigua or whatever that are, of course, never going to cooperate. So which does bring me back to the possibility of regulation, both of prediction markets, which, as you might know, are 18 plus, whereas sports gambling apps are 21 plus. Not to mention the prediction markets are completely lacking in consumer protections. So I actually do think there sort of needs to be a dual strategy here, one on traditional sports books, one on prediction markets, even a third when it comes to sort of black market operators. And all three of those need to work in concert to create consumer protections.
John, thank you for coming in. It is an issue. It's something we're all watching, and we appreciate your time this morning.
Thanks. And just for the record, I like Kenneth Walker under rushing yards for Sunday. I think that's a great bet.
I've heard a couple of prop bets that are like slam dunks. Cooper, what's his face? Cooper Kupp over
Cooper Kupp to score the first touchdown. Those are pretty good odds. Yeah.
Yeah.
I mean, I'm not going to bet it, but I'll take your $5 if you want.
Andrew told me the other day that Kylie did. I had no idea who you were talking about.
Kylie Jenner.
I had no idea. You used her first name. Kylie, she likes the Patriots or something?
She likes the Patriots. She spoke to Tom Brady on Jimmy
Kendall.
Fallon.
I think it was Kendall.
It was Kendall?
Yeah.
You getting your Kylies and your Kendalls mixed up? Now I know who Kendall is. He was on Succession, right? Oh, that.
Wrong person.
That's Squawk Pod for today. Thank you for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Weekday mornings on CNBC at 6 a.m. Eastern. To get the best bits of that TV show right into your ears, follow Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.